Good morning, everybody. Hopefully, y'all are having a great Friday. Currently looking at Netflix after the earnings.
On this degree, but I hate it, and I really want to change jobs. I'm sorry, I know this.
Currently trading at 336, up by 6.5%. And the earnings per share came in pretty shit at 12 cents. But the expected earnings per share was like 46 cents. So huge miss on the earnings per share, but the positive perspective to their earnings report was that they got rid of the CEO that was driving the company into the ground and leading to lower growth, supposedly. And they added 7 million subscribers for the quarter, whereas previously they were seeing negative subscriber growth, so they were losing customers. But this quarter they were able to turn things around. People are saying that it was probably the $7.99 deal that they created, that you have to watch ads, but I don't think that that's really the case, because it really doesn't make a difference if you're paying $7 or $11 a month for your subscription service. I don't think that $4 is going to break the bank. I think the main thing for Netflix and their competitors, Hulu, Disney Plus, etc., is what content they have on the platform at the time. If they have better content than the other person right now, then people are going to migrate to the other place. Now, personally, I have both Netflix, Hulu, and I think the Hulu Disney Plus, so kind of get the whole spectrum of it. But yeah, the main narrative is that they added a bunch of users for the quarter, and that they got rid of the crappy CEO. So their stock is up by a ton. I opened a call debit spread assuming that it's going to be above 332.50. Currently, they're trading at 335. So there's a decent chance that they come below my strike price of 332. So I could take my profits now and dip out of this trade. I'm making money elsewhere too. Looks like I'm up 470 and this one's only up by 150. So there must be somewhere else that I'm making profit. Let me see today's return. So 420 is how much I made from, I guess Netflix is the main driver, because yesterday it was down by a shit ton. So that is the main propagator for my account being up today. All the other trades, not really moving much besides the gold call, gaining me a little bit of $55. But still holding on to this Netflix trade. I do still have the QQQ call debit spread too, because I thought that earnings per share would be good for Netflix. But since the earnings per share came in very bad at 12 cents versus 48 cents expected, I think that it could be worth closing out of this QQQ call debit spread. It will be at a loss of, $100 or $150. But the earnings per share perspective, again, was very bad. 12 cents versus 46 cents. So I don't think that's very promising for the rest of the tech market. Like, not every other tech company is going to come out and lay off their CEO and show growth in their platform. So for me, I think it's worth cutting the losses on the QQQ call debit spread. My assumption was that they would go back to $280 for the Qs. Right now it's trading at $276. The bid ask on this is pretty bad at 12 and 15, but I opened them at 23, 15 of them, and I'm gonna try to get out at, I guess, 13 apiece. God dang it. Gotta love two-factor authentication slowing me down. Keeping my account safe, but also blowing it up at the same time by getting worse prices. Alright. So I got out at 195 for 15 of them, so we'll do the calculations after I post this. And then I'm still holding in the Netflix call debit spread. But let me post this to the Discord trade alerts. Where is this image? There we go. Come on now. All right. Closing options alert. Premium. Okay. Just cut losses on the 279, 280 was the strike prices. QQQ call debit spread. This one expires today. 120 at I think 13 each. Let me double check the numbers. 130, 195 or 15. Yeah. Originally got those at 279. Let's see. Okay. Originally opened those at 23 each, so $150 loss. Originally opened at 23 each. Looks like 10 at 23, 15 at 23 each. 150 loss. Is there a Discord that's accessible for free members? Yes, absolutely. I will link that right now. Alright. My mouse is dead right now, which sucks because I have to raise my arm in order to move my mouse around on my trackpad. Oh, first world problems, right? Alright, so I'm up by 600 for the Netflix call debit spread. It's trading at 341. So that kind of puts the nail in the coffin, I guess, for this trade. Not the nail in the coffin, but like the opposite, I guess. Kind of seals the deal, I should say. For me, it's trading above the 338.89 mark, which was the last resistance level that I had, stemming from the huge candle that we got after the first 5-minute candle to the downside. So this was a candle of significance. Obviously, this is also a candle of significance, more significance because it's larger. But I would say with it above 338.89, that solidifies the uptrend. That might solidify the uptrend for QQQ too. But I think with the earnings per share coming in so bad, it's hard to justify QQQ going up by that much this morning. But we'll see. Good morning. Good morning to you, Irfan. Hopefully y'all are having a great Friday. My Friday is definitely off to a good start with this Netflix trade. I will take that trade any day of the week. And I did actually add to this position yesterday, right before the closing bell. So I'm glad that I decided to take on that little bit of extra risk. I opened one more on top of the 3 that I already had, and the risk ended up paying off in a pretty big way. So very happy for this trade. I kind of want to try to close it at 220 a piece. I'm gonna have to go to Aries to get a decent bid-ask spread because Robinhood is always going to screw us over with the bid-ask. So let me type in tradearies.com. Alright, and if y'all sign up for Aries with this link, you should get $100 after staying with them for 5 months. After you deposit $500 to keep your account above $500 for that same amount of time. But let's see. Got a 2-factor authenticate. Always fun. 174,841. Should probably remember this device for 30 days. That might be helpful. All right. So we're gonna go to Netflix. On Robinhood, it's currently saying that it's going for 195. But we all know that the Robinhood bid-ask spread is predatory as hell, and you always get a worse price than what you should. So That's why I love Aries. They have much tighter on the bid-ask spreads. We chose a 330 long call and then the 332.50 short call. So if we order this, the bid is at 175, the ask is at 205, and if we compare this to Robinhood, this is 145 and 240. So obviously a lot tighter than you'll see on Robinhood. I want to close this at like 220, but with a bid at $2 on Aries, we're probably not gonna get that. Oh, it just moved up to 210. We might be able to get filled at 210 if we're lucky on this. Alright, so I'm gonna submit the order for 210. Total of $420 of credit to get out of the trade. I think we can get filled at 2 or 205 too, but I really want to get out at a higher price. I'd rather get out, obviously, at a higher price. It's going to 341.50, so this should be going for more, but it is what it is. All right, so I'll type in the order for 205, give up an extra $10. Oh, I have 4 of these. I didn't realize that I had 4. I thought I had 2. All right, the bid just moved to 210 for a second. I'll place the order for all 4 of them. I don't want to keep the whole position. Oh, it's going to 342 now. All right, I don't see why these wouldn't go for 210 then. It's 215 on the bid here. All right. Give me 210 or give me nothing. I'm not going to negotiate down. The bid on this is 210, so there's no reason that Robinhood shouldn't be filling me at these prices. No reason at all that they shouldn't be able to fill me. But, as you can see, not happening right now. Alright, so we got filled at 210 to close those. I think I snagged those at like less than 130 each, but we'll see. Let's go to Discord, post that trade alert right quickly. Hopefully with the new app that I'm developing, this will be an automatic process. That way everybody can see it as soon, like the instant that I close it or open a trade, but that will be to come later. All right, so closing options alert. Premium 101. Whoop, 101 premium. Just took profits on the Netflix call debit spread that expires today. 120 at 210 each. That's what I closed it for. Strike price is 330, 332.5. Originally opened that 330, 332.5 at 113 each was the average. Originally opened 4 at 113 each. So 210, 113, 97 per spread for $388 of profit. That's a little bit disappointing, honestly. I thought that I was going to get a good $600, but I didn't have the patience to wait throughout the day. I didn't have the diamond hands to hold on to this trade, but let's see what Netflix is up to right now. See if there's any regret. Yep, a little bit of regret there. It's still hanging up at 342. almost 343, but it is what it is. Might have been able to make max profit on it and made like 600, but who knows? This market is so damn volatile that it's hard to hold on to a trade for that long. But happy Friday, Guile. Why do you want to wait for it? Why don't you want to wait for it to collect the max profit? Just because the markets are so volatile and it could swing to the downside. My assumption for Netflix was actually wrong. My assumption is that the earnings per share would come in much higher than what was expected. But it turns out that it was a huge miss on the earnings per share. So I was wrong about the trade, but I still ended up making profit because their subscriber growth and because the CEO he didn't get kicked out of the company overall, but he got downgraded to some other executive position. I forget exactly, but yeah. Let me type this into the Google Sheets, I guess. Soon to be the beautiful app that I posted yesterday. I'll show that right quick. All right, well, we'll wait for that to load, I guess, and type in our closing price on this Netflix spread was 210. All right, so we closed that today, and this was closed by ourselves. It did not expire. And we got a credit of 210 to close each one, and I actually opened 4 of them instead of the 3 that I had before, again for a $380 profit. So that increases the profits for the month to $560. For the week, I'm up by good almost $1,100. And soon, this is the way that y'all will see my profit and loss. If we go to my post, created this nifty little dashboard, Alpha Trading Journal, coming out soon in the next 3 weeks. Should be out, I'm hoping, by first week of February, depending on if my developer can get it all together in time. But this is a dashboard. You'll see your performance, stocks, options. So if you're not doing so well on one or the other, you can be a little bit biased. But it'll show your realized PL, open positions, etc. Just the standard kind of trading journal. But this one, a little bit sexier, and then it's also going to have the artificial intelligence coach baked into it that no other competitor has implemented yet. So, but yeah, that's all the trades that I'll probably make today. I usually don't trade on Fridays, so I guess we'll just open the floor to questions from everybody. Today will be a Q&A session for the next 40 minutes instead of our usual trading session, just because Fridays I usually end up losing money. So don't want to lose the money that I just made on Netflix. But yeah, if y'all have any questions, let me know, and I'm here for the next 40 minutes. Oh, Jesus. My dashboard is a mess right now. So many tabs open. I should probably close out of my tab so the stream is a little bit smoother, I guess. Let me close out of this. Any thoughts on Microsoft earnings or Visa? So I'll be doing my analysis next week for those. Usually I'll do that on Sunday or Monday, depending on when the earnings falls. But Microsoft is doing pretty well off of the jump. after Netflix having a good earnings. So I think they could be setting themselves up for a trap on that. Netflix, the main driver for the earnings again was subscriber growth and the CEO getting kicked out. Microsoft isn't going to have the same situation. They're not just going to have subscriber growth because I mean they have services that they offer, but they weren't plagued with the issue of losing subscribers like Netflix was a couple quarters ago. So it's a different narrative basically for Microsoft and all the other tech companies in Netflix. You can't just base one tech trade on the next tech trade and expect all of them to have a good earnings report. So for me, going into Microsoft, I would probably fade it. So I'd probably take the downside on this trade. Let's see. My Thinkorswim is being super slow right now. I think it actually crashed, so we'll have to relaunch the Thinkorswim. But yeah, my guess is it's probably going to come down, and the price level that I would guess is probably like 225, 230, somewhere in that range, just based on a quick view of it. But I'll do a little bit more of a detailed analysis for Microsoft and some other big tech names. I'm actually working on making a video that's coming out this Sunday for how I trade earnings, my entire process basically. So that should be helpful to y'all, hopefully. Oh, Jesus, I got the spinning ball of death. Please just let my shit load. Thoughts on SPY today? I was bullish and bearish today. So bullish because of Netflix earnings and their stock rallying, but bearish because of the potential of a U.S. default. I don't know if y'all have been hearing about the drama over in Washington, but the newest drama is that Kevin McCarthy is refusing to pass a debt limit raise until they can work out something to reduce the spending of the government, which I think is really a good idea. I think that we should reduce the amount that the government is able to spend and, take more and more control and do a bunch of money laundering and call it defense spending. But that also puts the U.S. at risk of default. And if the U.S. ends up defaulting on its debt, that is the first time that's ever happened. That's going to cause absolute chaos for the market. So that's the negative. And then the positive is Microsoft earnings. So you really have to consider which one weighs more, Netflix earnings. So you have to consider what weighs more, Netflix earnings or the risk of the U.S. defaulting. I would probably say the risk of the U.S. defaulting is a lot higher. But let me force quit out of Thinkorswim since it's not responding, and then relaunch the damn thing. So let's see. All right, reopen Thinkorswim. It's going to take a minute to load, of course. Oh, what the hell? There we go. Okay. So my thoughts for SPY, again, is that the U.S. defaulting is more significant than Netflix having a good earnings. And really any other company having a good earnings. So if we go to the SPY chart, right now the VIX itself is trading at 2023, which I think is dirt cheap considering the potential of a US default. That would be an event that would probably spike the VIX well over 30, maybe even as high as like 40 or 50. And if we look at SPY, currently it's trading at 390, up 0.35% today thanks to a good Netflix earnings again. So if I had to take this trade, I won't make any more trades for the rest of the day because I don't like to trade on Fridays because it's too volatile for me, especially with today being the third Friday. That means that this is the monthly expiration date, which is going to make it that much more volatile because the market makers are going to have an incentive to push and pull the stock market in different directions in order to avoid buying and selling hundreds of shares of a stock. So, not going to trade it, but if I had to guess, probably bearish for today based on the US default news, probably creating more and more contagion throughout the market. I would assume that it would probably be below 391 or 392 if you really want to play it safe. So I would do a call credit spread assuming under 392. Right now it's trading at 389.89, so you might get a decent credit for it. If it's anything less than probably 25 cents of credit, though, I wouldn't take it. Just because, again, the Netflix earnings is bullish for the market, and I wouldn't want to bet against the trend. And then my thoughts for Amazon. AMZN, currently trading at 95, up 1% today, along with the rest of big tech names. Now, Amazon, on the other hand, they're not so much a services-based company. They're more so a goods-based company, and we've seen production starting to fall. So this would definitely be the trade to go against for Netflix having a good earnings, meaning that the rest of tech is going to have a good earnings. Microsoft is more software-based, but Amazon, it's all about shipping goods. And people have been spending less. We saw for the retail sales report that spending came in much less than expected. So Amazon would be the trade for the downside, I think, next week on their earnings report, which is scheduled for, I guess it's actually 2 weeks out, February 2nd. Let me double check the dates here. Calendar. Yeah, the 2nd would be on 2 weeks from now on Thursday. So still a couple weeks out. I wouldn't trade it yet. But that would be the trade that I would fade on good tech earnings, personally. Can we short Netflix now? Or would you wait? I wouldn't bet against Netflix. My reasoning for that just because of the subscriber growth. The stock is already down a shit ton. It's at 339 versus, 700. So this is still down by 50%. So it's not necessarily overbought, oversold. Let's see. On the yearly chart, definitely looking up, and it just passed that critical resistance level that was the gap from a really bad earnings report. So I would not bet against the trend here. I would not assume that it's going to come back under 333 anytime soon. If anything, I would probably assume that it would come to like 350 or so before it hits 333. So I would probably wait until it hits around 350 or so and then take the short. Google is up 4% today after laying people off. Yeah, that's the new... laying people off is the new... What is it? Stock split. That's the new catalyst for huge green days in the market, anytime there's mass layoffs, the stock just rallies like hell, which is the dumbest thing, but it is what it is. Basically, the markets interpret it as cutting their expenses, which means that their earnings per share is going to go up, which is true. But if they're making less revenue, then the earnings per share isn't going to go up. So it's a double-edged sword, which really shouldn't result in a stock going up by 4% in a day, but that's the market that we're facing right now. So I guess what you can do if you want to make a nice little quick profit is guess which tech company is going to be laying people off next and make a decent chunk of change off of it. Hi, Cameron. Good morning. Apple is the black sheep today, down 0.4%, whereas basically all other tech names are up. Interesting enough. 10-year treasury rate is up 1.5%. That is not good for QQQ at all. And that's a gap up too. So I would not trust this rally. I'm tempted to take the downside trade for this. Maybe for next week's expiration date. So I might make one more trade today just for an option that expires next week based on the 10-year treasury yield going up. I'm not sure why the 10-year treasury yield would go up. Maybe it's the risk of US default would... I don't know if that would trigger rates higher or lower if that actually did happen. Obviously, that's very risky, and whenever risk goes up, yields will go up accordingly. And people wouldn't want to buy bonds, treasury bonds, from the U.S. government if they can't pay their debts. So my assumption is that if we continue to get the fears of the U.S. default, then rates ought to go up, bonds ought to come down. That means that QQQ obviously would suffer the worst. You could go short on bonds as well if you want a direct kind of one-to-one, whereas QQQ could be conflated with earnings reports. So maybe TLT, going short on TLT might not be a bad trade to take on. When is the Fed talking again? They are going to be February 1st. But anyway, let's take on a short trade for QQQ. We'll use... All right, I want to see what earnings are scheduled for next week. I know we have Microsoft. Apple is probably reporting, if I had to guess, next week. That one's going to be a rough one, I would imagine, in terms of comparison to last year. Obviously, it's a high-end good, which has been really kind of in the shitter recently. So I think Apple's going to have bad earnings, which is scheduled for... Oh, they're scheduled for February 2nd as well, so we're not even getting the big names. What is Tesla earnings? This one is scheduled for 125 with the shit that's going on in China, and they dropped their prices like 30 or 40% over in China. They ended up dropping the prices like a good 15% or 20% in the US. Obviously, demand for the vehicles is going down. It's a very high-end good. Obviously, a $60,000 Tesla is unaffordable for most people. So I think the obvious trade is down. Now, saying how far it's going to go down is the hard part. I'd probably say 115 or so. And then if we crack below 110, we might head into the double digits, which would be pretty rough for Tesla investors, but not out of the ordinary considering, the lack of spending that we're seeing in vehicles, houses, and high-end goods that people just can't afford anymore because of, people paying $300 extra a month for groceries means that they can't spend that $300 extra a month on the $1,000 car payment. So let's see though. Yeah. Tesla, I would assume, would have a bad earnings report. Microsoft, I would assume, would have a decently bad earnings report. So I say we go short on tech next week, and the cherry on top is the 10-year Treasury rate going up. Treasury rates across the board going up because of the risk of the U.S. default. So let's look at the Qs, see what price levels we got drawn up. The top price level that I've got is through 280.94, which is only $2 away from where we're trading right now. I'd like to go a little bit higher, probably. But the risk range for next week, January 27th, I guess, is the end of next week. $6, $6.50 in either direction, basically. Right now it's trading at $2.78. So $2.78 plus 6.5 would be $2.84.50. Would be the top of the risk range for, QQQ. So $2.84.50 would be right around here, which was about the top that we saw right before this decline. No real gaps or anything around that price level. There was a gap at 243.5 that we could watch, and then another gap at 278, which is below where we're trading right now. I would rather take the call credit spread than the put debit spread for next week, even though it is going to be a little bit more risky. So let me actually look into that trade. Tesla's going to be reporting earnings. What day? $125. So that's what day would that be? Maybe Wednesday or something like that, if I had to guess. Microsoft is reporting. Also, actually 124, so I would guess that would probably be Tuesday. So Tuesday, Wednesday is when we're going to see the decent drop. So I'll take that trade. I'll go with Wednesday or Thursday expiration on the Qs. Right now, the Qs is up by 1% today. And I'd say there's a decent chance that it's going to be below 283 or 284. If we call it 284, we get about roughly 17 cents in credit is what it's looking like, which I don't feel like is enough for a 4-day trade. 15 cents of credit, not enough for me. So if we go one strike price lower, we get 20 cents of credit, which I still feel like isn't enough. All right, if we really want to be risky, I guess, we assume it's going to be under 281 with the call credit spread, and that one's paying 30 cents of credit. And I think I would say it's low, so it's not necessarily fair. But I'm pretty certain on Microsoft, Tesla having a bad earnings report next Tuesday and Wednesday. So by Thursday, I'd say there's a very low chance that QQQ is above where it's trading right now, at least. Currently at 278. I'm assuming that it's going to be under 281. So that's about a 1% or 1.5% climb from where it's trading right now. In this trade, I think I'm willing to put on a decent amount of risk for it. Let's see. Probably a good 300, I would say. Maybe 400 on it. All right. So if I put down 10, that's 600 in risk. That's too much for my taste. But if I do 6 of them, okay, yeah, 0.31. Curious about the UVixie. Not sure if you responded to it. Give me 1 second. So UVixie, I'm still holding on to. The shares, the call option that I bought is expiring worthless today. But I am still holding on to the shares at the moment. And I think that the big catalyst is the potential of the US default. The government will probably end up shutting down pretty soon if they don't pass the debt limit increase. Just opened a new QQQ call credit spread that expires today. No, it does not expire today. That is a mistake. 125 is my expiration date. 125. And I got them at 31 cents each. And the strike prices, I'm assuming that it's going to be under 281. All right. Tesla and Microsoft earnings next week on, 125 and 120. 124, 125. 125 and going up with Netflix currently. But I think they will both miss as Tesla sells high-end goods and Microsoft is unlikely to see major subscriber growth like Netflix did. On top of that, the US is at risk of defaulting, which I think will send rates up in. Now, obviously, I don't know 100% because the U.S. has never defaulted on its debt, but my assumption is that rates would go up substantially if that risk does become higher. Would I say that my quality of life has improved since quitting my job and trading full-time? In some aspects, I would say. I would say that I'm under a decent bit of stress every day, analyzing the markets, having to deal with politics. There's parts of the job that I do now that I don't enjoy, but at least I get to choose my suffering. Whereas whenever I was working at the call centers where I worked last, I didn't really get to choose, right? It was just kind of forced upon me in order to, make a living and be able to put food on the table and shit, right? Whereas now I get to choose what I do. Like if I don't want to pay attention to the politics and shit, then I can just try to shut it off. Recently I've been seeing a lot of Joe Biden tweets on my Twitter account, but then I've been scrolling past them recently, so hopefully the algorithm figures out that I don't want to see Joe Biden tweets anymore. But yeah, you just kind of have to pick your vices, I guess. Pick your struggle, I would say. Whereas when you're working a regular job, you don't really get to choose your struggle. You just have to keep working and putting food on the table, whereas now I get to just do whatever I want. So quality of life has definitely gone up. Been able to work out every morning, which has been nice. But yeah, it's a pretty good life, I would say. It's a lot better. My life has improved a lot over the last 3 years, I would say. What's your average income trading options? I usually make $250 to $700 a week, but scared it might be luck or won't be consistent. I would say that it's very hard to find consistency in trading. If you look at my last year of trading, if I can find it, let me see. I had months where, I was up by $6,000 one month. The next month I gave up $4,000. So you're going to have a huge pendulum of gains and losses, and you have to kind of stomach that, right? I would say that it's very hard to get by just on trading alone. That's why I have, the YouTube channel, coming up with a new app, and, all the other different business ventures I'm looking into to provide more stability, because trading, you can make a lot of money. Like I made $6,000 last year trading with only $10,000. So if I up that to, $100,000, then I'm making, $50,000, $60,000 if I'm making the same return and taking on the same amount of risk. But, that's going to come with months where I might make, a good $30,000 just to lose $20,000 the next month. Net over that 2 months, I would still make $5,000 a month. But you have to realize that consistency in trading is very difficult because the markets are always kind of shifting around. And there's ways to adapt to the markets, right? Like you can take on low volatility type trades, like credit spreads and iron condors, whenever volatility is low, like it is right now with the VIX at 20, and then you can take on higher volatility trades like out of the money called debit spreads. So you have to be adjustable. You can't stick with one strategy. And I guess shifting from one strategy to the next as the market conditions change, it's very difficult. And, sometimes you will be inconsistent in making profits throughout the market. But, at the end of the year, as long as you're putting in the work and trying to refine and improve your strategies, I would say that you're going to be profitable at the end of the year. There's going to be times where you're making a crap ton of money and then losing some of that. But you kind of have to be okay with it and have, a nice little side income, I would say, just to kind of balance things out. My average income, though, $6,000 last year in profits would mean 6,000 over 12, $500 from trading each month. This month, this year, I should say, my hope is to trade with $3,000. If I'm still making that same 60% return or so, that would multiply this to 18,000. So the hope is that I make about $1,500 a month this year from options trading. But yeah, UVXY, I'm still holding on to. Guile. Might continue to buy shares since they're trading so cheap compared to what I bought them for. Especially with the U.S. default news, I think that could really kind of shake up the markets in a big way. But the problem is that I think the deadline is all the way out to the summer of next year, if I remember correctly. So that means that all of that time value on UVXY is going to be wiped out. So even if it does happen, UVXY is trading at, 562 right now. If the U.S. ends up defaulting, tomorrow, then I would say it would probably go to like $10 or like $8 to $10. But if the U.S. ends up defaulting all the way in like June, this probably would lose I don't know, a good 30% of its value just from the time decay. So it'd be trading at 560 times 0.7, like 392, which means that it might make its way back up to break even at like $6 to $8 if it takes that long for the USD default. If you can, I would suggest trading the VIX instead of UVIXY. Yeah, no problem, Kyle. If you're able to trade the VIX, I would do that instead. If you go, I know Aries, you can trade the VIX. Robinhood, you can't. But if you look at VIX.X, you can trade this. Buy it, buy just shares of it. It's saying 0.0. I don't know why. Okay, if I try to, I don't know, you might not be able to buy it, but I know you can trade options for it. So maybe you could buy like a call option that expires in something like August, which would be the end of the summertime. Right now, these are going for $6.40 a piece, so your break even for this would be $25.40. I would say easily it's going back to $25.50 sometime over the next 8 months between now and August. So this trade I would say is an easy bet. Would probably be a trade that I'd be willing to take on. But if the U.S. does end up, increasing the debt limit, which is usually the case, then the volatility from that, the expected volatility from that, would be diminished. So that would end up causing the VIX to probably fall down to like 15 to 18 if that did happen. So basically there's these fear factors that are in the market, like the US defaulting, Russia sending over the nukes, whatever is going on right now. China locking up their economy again. And once those fear factors get taken out of the market, the VIX is going to go down further. So if the U.S. ends up raising its debt limit again, that would cause the VIX to go down. Can you tell me why the same call or put option is more expensive to buy on Robinhood than if I purchase it on Webull? It's all about the bid-ask spread. So each broker is going to have a different market maker, and the market maker is the person that's selling the option to, not the person, but the entity that is selling the option to you. Robinhood has one of the worst market makers, even though they're the most popular app. So you're always going to get a worse price whenever you're trading on Robinhood versus pretty much any other broker, I would say. Aries definitely is much better. Webull, I haven't tried it myself, so I don't really know exactly how much better their pricing is. So you really just kind of have to try around different brokerages. I would say the best one, if you want the best prices and the quickest fills, would be E-Trade, in my experience. That has been, you will pay like a 65-cent commission for each option that you open, but if you compare that to the 65-cent commission for something like TD Ameritrade, you will always get a better price on E-Trade versus TD Ameritrade. Don't they all sell to Citadel? I think that they have different market makers than just Citadel. Citadel is the main one, and that's the one that Robinhood uses, but I'm not sure who E-Trade's market maker is. Tastyworks is pretty good. They do charge an extra. Actually, no, they only charge $1 for each option that you trade, period. So they don't charge you for each time you open and close. They only charge you $1 once for the entire trade, whereas other brokers will charge you 65 cents on open, 65 cents on close. So you end up paying 130 versus Tastyworks, you'll only pay $1. Tastyworks is also good for like beginner traders because they have, nice little tutorials that they include with their broker. Aries is pretty good in my experience. The problem with Aries is that it's a new broker, so there's a ton of new features that they need to add. Like the grouping of spread options is something that they've been working on for like 3 months at this point and haven't got it out yet. So if you do trade with Aries, then you're going to have to deal with the growing pains of a new broker. But in my experience, Aries has the best bid-ask spreads. They charge $0 in commissions, so that is the upside of trading with Aries and why I chose to trade with them for a while until, I got the 90-day restriction that you see right here. Otherwise, I would probably be trading with them. Tasty has great charting and shows the standard deviations. Combine Tasty and TradingView. Yeah. TradingView is good for charts. I just don't want to pay the $30 a month to see fucking charts. Like, that's ridiculous in my eyes that you have to pay to see charts. Alright, let me check on the Qs right quick. Alright, so QQQ is trading at 278, so basically where we left it whenever we open that call credit spread. Does look like the trend is up to this morning. I would imagine that Netflix is still doing well if I had to guess. Currently trading at 337, so it did end up pulling back from 342 or whatever it was, so we got out at a pretty good price for Netflix. Yeah, I think I exited roughly in this area between 340 and 342.50, so glad that I got out of that trade when I did and didn't have to bag hold it and worry about it coming back down to the 332 and below. But yeah, that's the end of the trading day for me. We'll take one quick look at the profits for this week and the losses that I took. Just a little weekly recap, I guess, and I'll be on my way. So, going to the January log, this was the third week of January, made $1,086. I have yet to log some of the trades that I took a loss on. For United. No, United I already did. Let's see. What other trades do I have open? I guess none that are from January, but I think I had some from December. When did I open the... There's a trade that's expiring worthless today that I want to make sure I count. The $41 put for Wells Fargo is expiring worthless today. I bought 4. I paid $123 for, and I opened this on December 30th, so that would go into last month. But this trade I ended up losing, 4 times 123, so $500 on. So if we counted that towards this week, I'd still be up by 500. But yeah, pretty good week for me. One day I did take losses, made 380 today, 760 on Wednesday. Kind of wish we had a longer week and I could have traded on Monday, but MLK day. Then the biggest loss for this week was $180 day. And the biggest L that I took for the week, let's see, starting here going down, was $210, which was for the QQQ call debit spread that I had made a mistake on and chose the wrong expiration date. So that could have been avoided, but it wasn't. And then I think I took profits on this one. Let's see. QQQ called... Oh, no, I closed out of this one at a loss, so let me log that. Closed. And I closed those at 13 each. So that's going to knock down the profits a wee bit. And then make these green. And then I'll type in my newest trade, and that will be the end for today. So today's date was the open. It was a QQQ call credit spread, a bearish to neutral strategy. Expiration date was set for 125. The strike price that I bought was 370. No, 3. I'm going to have to double check because I don't remembers. 282 and 281. So I bought the 282, sold the 281. I opened 6 of these at 31 cents of credit for each one, and obviously yet to close it. So at the end of the week, made $936, lost $1,200 last week, so got to make that money back, another few $100. But overall this month so far, up by 413. Average win has been 169. Average loss has been 156. And the win rate has actually been 50-50, so it's about a coin flip. Interesting enough. Usually my win rate is a bit higher, like 60, 70, but more often I've been trading with call debit spreads. So I feel like with a call debit spread, it's less likely to work out. But as long as your average win is bigger than your average loss and you have a 50% win rate, then at the end of the month or whatever, you're going to be profitable, right? If my average win was like 200 and my average loss was 100, that would be ideal, but obviously not the case. Actually, let's just base it on what I'm doing now. So I'm basically making 170 for each win, 51% of the time. You subtract 156, multiply by 49%. So each trade I'm making roughly $10.25. So the more trades that I take on. So if I took on like, I don't know, 100 trades this month, then I would make $1,000. I don't think I've ever done 100 trades in a month, but so far this month I've done 52 minus 11, 42 trades. So definitely working up there. But yeah, that is the end of today's live session, and I will catch y'all next week on Monday. I don't think that Monday's a holiday, so I should catch y'all next week on Monday. See everybody.